Trade-dependent Singapore is expected to experience a soft growth over the next 18 months as the global economy continues to get frazzled by trade disputes such as the China-US trade war. But experts say that some economic data, such as the latest manufacturing numbers, are showing signs of a possible pickup in the economy.
Singapore's economic growth over the past few quarters has been weighed down by global uncertainties. The economy grew by 1.1% in the first quarter of this year, but that figure fell to 0.1% in the second and third quarters. Overall, for 2019, Singapore's central bank says that GDP growth is expected to come in at about 0.5%. That's about 1/6 of the 3.1% growth last year. While the numbers may seem bleak, economists are saying that there are signs of improvement and Singapore is unlikely to fall into a recession. For example, September's manufacturing output recorded a 0.1% uptick, rebounding from the 6.4% decline in August. One economist says the overall climate is expected to remain challenging until at least the middle of next year. And while this means a softening labour market, workers in Singapore should not be too worried.
Whenever there's a recession, usually the employers try to hold on to workers first. Retrenchment is usually the last resort. And essentially this is what we are seeing today as well. Some of the companies are struggling, but we are not seeing mass retrenchment yet. I think companies are being very responsible and they're trying to hold on to the jobs, the headcounts, for as long as possible. And I think this is actually a very positive sign.
While workers can expect to be spared the brunt of Singapore's economic slowdown for now, wage growth is still likely to come below expectations. This would also result in consumers tightening their purse strings.
Because the uncertainty still persists, so people are holding back on spending. We see that in the retail sales numbers, which have been negative for this year. During periods of uncertainty, you tend not to purchase any big items.
Mr. Seah adds that the Singapore government could look to fiscal policy to boost the economy, like switching to a zero appreciation monetary policy for the Singapore dollar. But the government will need to balance between meeting short-term needs and sustaining a longer-term policy response to cope with the changing economic conditions.